You are listening to chartingwealth.com for Friday, the 5th of February, 2016. IYY is where we always start. That is a total market exchange traded fund that tracks all the stocks in the market, and it has been trying to cross over on the 2-day trend line, and it has been having a hard time doing that. It was technically up a little over a quarter of a percent today. It is above our 2-day trend line that we have drawn. It is showing to us what we would consider very close to a doji. It is a type of Japanese candlestick pattern that typically means lots of indecision. There was more downward movement that the bears were able to drag the market down, the bulls up. Not as much up movement in the market. If we switch over to our 4-hour chart, what we see is green boxes going up. The actual 4-hour chart rotated over, going up back on the 21st of January, and then fell off starting on the 2nd of February, and has tried to move back up again, but has not recovered anywhere near it where it was at the end of the day on the 1st of February. So we're just waiting. We have not seen a crossover yet on the big chart. I am wondering if it's going to happen. If it's going to happen, it's probably going to happen on Friday, but we're just going to have to wait and see. We have seen the derivative oscillator flip over, but as far as what we're actually seeing with the chart itself, there is a difficulty in doing that. Now let's switch over to back to our 2-day chart and go to SPY. What is that? That's the Standard & Poor's 500. We see that it was has actually crossed over going up, although our candle pattern is a doji, is very much a doji, and that is showing us that indeed where the chart is lots of indecision. Now maybe it'll fly up. Won't roll back through that because it's not quite solidified that crossing yet. And when we look at our 4-hour chart, what we see is the 4-hour chart has the market moved up throughout the course of the day. Again, barely 0.16%. So not huge moves up. And it's in a negative on the derivative oscillator. So that's interesting to watch on the 4-hour chart. So we'll continue to monitor these things as the markets go along. Now lastly, as far as our indexes go, we are going to watch and take a look at the Qs. The Qs was down 0.01%, so 1/100ths of a percent. Not a lot down. Derivative oscillators rotated over going up, but we've not seen the Qs. It has steadfastly refused to cross over on the 2-day chart. It's actually broken through the 2-day trend line. What do we see going on our 4-hour chart? Well, those of you who are watching, hope that you had looked this morning and gotten into the market if indeed you were going to make a virtual trade, because that is what our charts told us to do. We have been in a long-term down move on the 2-day chart. It's never crossed over going back. We were waiting for it to level out and then roll back over, and we have seen that happen. Now, that is what our charts are telling us. Whenever we have the rollback after it crossed over going up on the 21st, we've been waiting for the markets to level out and roll back over on the short chart, and that is our trigger for getting in. You could have also used the breaking of the 2-day trend line as a trigger to get in, but again, we've had that happen. Very soon after that happened, of course, we had a crossover going down. And look, at the same time our crossover went down on the 4-day chart, our derivative oscillator flipped over too. So what could be better than in virtually the same, well, yes, one of the same candles where it broke through the 2-day trend line and sustained that break, because it didn't sustain the break actually in the first crossing over in the morning of the 3rd. But on the afternoon of the 3rd, we actually had it sustain that break, and that again, opening in the morning on the 4th, was your trigger for getting in. We had the derivative oscillator rotate over, and we had the trend line be broken, and we had the MACD cross. So that is where we are as far as our trade, any kind of virtual trades you might do in the Qs. Those you don't listen all the time, The reason we say virtual is we're not a stock calling service. We're simply an education firm. We talk about what we see in the markets and try to get you to follow and understand, practice, and then once you learn enough, you can make the decisions on your own. Lastly, we're going to go to gold. We're going to look at our 2-day chart, see what we see. Gold has continued to move up. It was up strongly today, 1.21%. Gold, of course, has been in a crossover going up since the 14th of December. If you got in back then, you've done very, very well in gold following our charts. Now, if you're paying attention to the 4-hour chart, of course, it crossed over after the big chart had already been crossed over. If you had gotten in and paid attention on the 20th, you would have watched this roll up from somewhere on the high of the 20th around 106 to 110. That would have been nice moves up in gold. So hopefully you have been doing that and you have been paying attention and watching your money go up, up, up in GLD, or your virtual money. That is where we are as we go into Friday. Again, please pay attention to all the market indicators. Make sure that you follow the MACD, the derivative oscillator, and the candlesticks. And of course, if you don't have a copy of the Stock Trader's Almanac for 2016, you're already a month and a half almost behind the show. You should have gotten that in about mid-December, so you were ready to go. If you don't have it, you should order it from the good folks at Hirsch Publishing. And again, that is the Stock Trader's Almanac for 2016. We love it. Now, if you've not already signed up for our newsletter, you need to go to chartingwealth.com and do that. You will get how to read a stock chart video and the layout that we use here with all of our set performance indicators. You get that for free by just signing up for our newsletter. Easy to do. Thanks so much for joining us from chartingwealth.com.